Hey, it's Jason, and I want to do a quick video talking about the state of deal making here. There's a lot of new developments that we're seeing in real time right now as we have one deal under contract, another deal we're looking to put under contract. We're very active right now. We expect to close a deal or more here in Q3 or Q4 of 2022, and you have the opportunity to do the same. A few things are happening right now. Number one, because interest rates are going up, I think a lot of buyers are having a tough time executing the transactions, and what we're seeing right now is a lot of deals are falling out of contract or exclusivity of any sort, right? So they were under an LOI, they didn't make that jump to a purchase agreement, or they were under a purchase agreement and now they're falling out of purchase agreements and they're coming back to the market. I'm seeing a lot of that right now. We've seen a lot of that in the last 60 days. Of course, interest rates are rising, but I mean, you could have watched my content 6 months ago. It was pretty obvious it had to happen. What I think now you're finding, however, is there's less buyers that are comfortable paying 8 or 9% to buy a business than there were buyers that were willing to buy a business at 3, 4, 5, 6%. And so I think there's less buyers out there right now. So you're having deals that are falling off out of the contract. They're coming back to the market. You have deals that are on market again. You have buyers that aren't willing to pay the price. And oh, by the way, it's August right now. And I can tell you firsthand that all of the deals that BU or BL, the two companies that I founded, have ever done have taken place between July through December, Q3 and Q4, the second half of the calendar year. So for us, I mean, we see a hell of an opportunity right now. It's the time of the year where deals normally just get done because tax returns have been produced for the year prior. Sellers are ready to sell in the back end of the year. Lenders tend to have budgets they need to get out the door before the end of the year. So those factors that are in play every year around this time are in play. So obviously it's just deal making season from that perspective already. But now you have deals that are coming back to market that weren't able to get closed. Sellers that I think are having to adjust their expectations a little bit. It's not August of 2021, it's August of 2022. It's not a zero interest rate environment anymore. Buyers that thought they were buyers aren't actually buyers. They didn't run the newfound debt service cost into their calculus. And as an aside, I think you could argue that we're getting close to the height of where the interest rates are gonna be. Now I'm switching gears here a little bit. But if you've studied Jerome Powell, the Federal Reserve, the US federal government, things like that, you know that the United States government has a huge amount of debt. And every time interest rates go up, it increases the cost of the US government's debt service. Just like businesses have, X amount of dollars they can afford to pay in debt, so too does the United States. And so Jerome Powell's in a really tricky spot right now. As he turns the dial on interest rates and continues to turn them up, it increases the debt burden for the US government. Meanwhile, the US government has to get inflation under control. There was finally, you would have seen here for August, finally some fairly positive data with regards to inflation and the fact that it may be finally, and actually has finally shown some signs that it's peaking and perhaps on the decline now. And so the real thing that I think you could look at, and you can't guarantee it, but you may very well be able to buy a business right now at the height of where the interest rates are going to be, factor it into your calculus such that the business can cover that higher interest rate debt service. And then in 18 months from now, the theory is you would refinance that deal closer to a zero interest rate environment. And then you pick up the difference on the spread. In other words, if your deal can handle high interest rates, your deal's going to love low interest rates, right? So if you buy a company that can easily service high interest debt, then when rates go back down, and they probably will, don't bet your entire farm on it, but based on the way the US government has so much debt, it's likely that interest rates will fall again. I think the American people are addicted to quantitative easing. That's my personal theory, but I did predict that rates were gonna go up about 6 months ago, so I think I have something of a good feel for this. But again, there's a play to be had right now. The real punchline, take my commentary out of it. The real deal right now is, hey, it's buying season because it's the second half of the fiscal year, the calendar year. It's always buying season in the second half of the year. Most deals get done in the second half of the year. You have high interest rates, which means if your deal can handle these high interest rates, it's gonna love low interest rates. You have buyers that can't perform, and you have deals that have just coming out of contract with sellers that are motivated. It's a perfect storm right now. That's why we've suddenly become very active. And I'm on the record 6 months ago saying, hey, I'm not really super interested in M&A right now. I wanted these higher interest rates to come. I wanted these sellers to change their perspective a little bit. That's changing as we speak, and so our position has totally changed on buying businesses. We're on the offense right now in a major way. And if you're a deal maker or an aspiring deal maker, I would say it's a great time to get started. There's some chaos out here in the market. There is some chaos, but from that chaos comes opportunity. That's our perspective, and that's why we're taking advantage right now. That's why we have one deal under contract, and I'm going to be on another call with my team here later today, discussing a couple of other opportunities we have out here right now in the marketplace. So there's a lot of opportunity if you shrewdly navigate.